Welcome to this week's Money Metals podcast, helping gold and silver investors during these treacherous times. Now, here's this week's market wrap with commentary and analysis from the company voted 2015's Precious Metals Dealer of the Year in the U.S., Money Metals Exchange.
Welcome to this week's Market Wrap podcast. I'm Mike Gleason. Well, as expected, Janet Yellen and company passed on the opportunity to raise rates. At its Wednesday meeting, the Federal Open Market Committee left benchmark interest rates unchanged, near zero. Facing the reality of a still sluggish job market and deteriorating economic data on some fronts, Fed Chair Yellen said the Fed would wait until the numbers showed a more sustainable recovery. As long as official inflation rates remain below target, the Fed won't perceive any urgent need to hike. But after months of preparing markets for rate hikes this year, the Fed's credibility is at stake. Fed officials would like to see jobs numbers and inflation rates tick up in order to give them cover. They may well get their wish, at least on the inflation front. Some signs are emerging of price increases making their way through the economy. Gasoline prices rose sharply this spring. Meanwhile, data from the Labor Department show the Consumer Price Index rose 0.4% in the month of May. That's the largest monthly jump in the CPI since February 2013. If the U.S. dollar continues to weaken, prices for commodities in terms of dollars can be expected to rise. The U.S. dollar index fell following the Fed's announcement Wednesday that helped give a boost to gold and silver markets. Gold closed Thursday slightly above $1,200 an ounce, while silver cleared the $16 level on Wednesday. As of this Friday morning recording, gold trades at $1,203, good for a weekly gain of 1.8%. Silver prices currently come in at $16.19, up 1.2% on the week. Platinum and palladium, on the other hand, broke lower toward new lows for the year. That has to be concerning to precious metals bulls. Are the platinum group metals pointing lower for the entire precious metals complex, or will gold and silver break out to lead a precious metals rally? We won't know until gold and silver prices break decisively through their months-long sideways price channels one way or the other. Low silver prices are leading to a large supply deficit in the making. Spot silver and base metal prices below production costs threaten to hamper mining output for some time to come. Meanwhile, global demand is on the rise, especially out of India. According to a recent report by metals analyst Steve St. Angelo of the SRS Rocca report, India imported 25% of world mined silver last year. This year, India is on course to consume about 300 million ounces, or nearly one-third of global silver production. Closer to home, a lot of ounces of precious metals will soon be making their way to Texas. As we reported in recent email news alerts, which you can sign up for on our moneymetals.com website, the state of Texas moved to establish its own bullion depository.
Lawmakers recently passed a historic bill that would establish the very first state-run gold and precious metals vault. The idea is to store gold, silver, and other metal bars, precious metal bars, underground here in a way that would both protect against federal intervention and also perhaps lure out-of-state gold back into the state on the promise of storage that might be cheaper.
When Governor Greg Abbott signed the bill last week, it was a major PR blow to the New York Fed and HSBC Bank, the two entities responsible for holding the Lone Star State's gold. The state of Texas joins countries like the Netherlands and Germany, who are trying to claw their gold out of Wall Street's grubby hands. These governments are rightly worried that there are more claims on physical gold than there is actual gold. The financial sector likes to engage in activities like gold leasing, swaps, options, and many other forms of financial accalmie. When gold is leased by its owner, the borrower of the gold can then sell the gold they borrowed and replace it with a paper contract to buy gold in the futures market. So gold is lent out, then sold by the borrower to someone else. The new owner can start the cycle all over again. That's one way multiple owners can have a claim to the same gold bar. It's akin to fractional reserve banking. Everything seems to go fine until there is a run on the bank. It's the kind of risk that Texas wants to avoid by taking direct physical possession of its $1 billion in state pension fund-owned gold. After all, why take so much risk with something that is supposed to be financial insurance? There's a lesson here for everyone. Get the physical stuff. Either hold it yourself or hold it in secure vaults managed by people you trust. If you're looking for a low-cost, highly secure facility where you can store your bullion, you have a great new option, our all-new Money Metals Depository. We're raising the bar in the industry, offering you affordable, convenient, maximum security, and fully segregated storage so you can have total peace of mind. On top of all that, your metals are insured by Lloyd's of London, and you avoid all shipping costs whenever you buy or sell. So if you own $5,000 or more in precious metals and prefer not to store them in your home or bank, call our team at 1-800-800-1865 for more information. Even if you elect not to store your bullion with Money Metals Depository, we still urge you to find a secure place to keep your metal. Not all storage services are what they appear. Some are affiliated with banks, some will commingle your precious metals with those of other clients and those of the firm. At some depositories, you won't be able to deposit particular bars or coins and take delivery of the exact same ones later. You just own an interest in some quantity of metal. And with so-called pooled or unallocated accounts, the counterparty risk and the higher risk of fraud cannot be ignored. By contrast, in fully segregated storage, your metals belong to you and only you. This is something called bailment. Your metal is stored in the area of the vault specifically dedicated to your holdings. Fully segregated storage can cost a little more than pooled or unallocated storage, but it's a small price to pay for much greater peace of mind. The whole point of holding a portion of your wealth in physical precious metals is to escape the financial system and avoid empty IOUs. So don't turn your precious metals investment into a third-party IOU on precious metals or a Wall Street financial instrument such as an exchange-traded fund. Stick with direct ownership of physical metal. You want to hold some of your gold and silver bullion in a safe place at home for immediate emergency access, but secure storage facilities such as Money Metals Depository are more resilient to external threats such as burglary and are more convenient for storing large quantities of metal. Well, that will do it for this week. Thanks for listening. Tune in next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Leeson with Money Metals Exchange, reminding you that we remain fully committed to getting you the most value for your depreciating dollar. With speed, with accuracy, and with top-notch service. Have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.